Bolan's Blowouts, a look at two stocks. Whether it's in the form of great earnings or positions getting blown off the books, Brian Bolan gives you the lowdown on what happened.
Welcome to another edition of Bolan's Blowouts. I'm Brian Bolan and your host, and today I'm joined by Ryan McQueeny. He is an editor at Zacks.com. Welcome, Ryan.
Thanks for having me. Everyone who works for Zacks Investment Research has been telling me the highest honor you can have at this company is to be invited on Bolan's Blowouts. So I'm happy to be joining with you today.
Yeah, it's amazing that you got this honor so early here in your career. I mean, you do one top stock picks with me and make fun of my age. And
the next thing you know, you're on Bolan's Blowouts.
You're blowing it out.
Career peaking in a very early stage.
Right. So now we'll just have to decide whether or not you're blowing it out or getting blown off the books.
Yeah, we'll let the viewers decide, I guess.
Okay, right. All right, so the first stock that we have on Bolan's Blowouts is the stock that had a blowout earnings event, and that is Seachange. If we take a look here, we see that we've got a Zacks rank #1 and a B for growth and an F for value. I like that as the aggressive growth strategist. I like to see the big divergence in growth versus value because that tells me I'm on the right path already. If we take a look at what the earnings event was here, we see they reported 9 cents when the estimates were looking for 1 cent. That's an 8-cent beat or 800% positive earnings surprise, Ryan.
I like triple-digit earnings surprises. Those get me excited.
Especially green ones?
Yeah.
Positive earnings surprises. Okay. So yeah, the idea here is this stock is moving up, but I just want to throw a little caution out there on this one as well. This is a slide from their recent investor deck, if you will. You see quarterly revenue not doing what I like to see. I like to see it going the other way. I like to see it going up and to the right in these sort of things where time is on the bottom and moving that way. So down and to the right is not my favorite thing.
Well, one thing I wanted to mention that might help with that trend is something we've seen in kind of the greater software industry work out well for people, which is kind of a shift to a software as a service model, a SaaS model. This is a small cap company focusing on video delivery, but looking at some of the larger names in the software industry that have really aggressively shifted to that SaaS model over the last few years. Adobe, Autodesk, Aspen Technology, seen great success there. So.
All right, so a shift to SaaS may help things.
Yes.
All right, well, that stock with the blowout earnings event. All right, next up is a stock that is getting blown off the books, and today is the very day that it's getting blown off the books. Usually I do a Zacks rank #5, which is a strong sell, and that is already, the event has already happened, and the estimates are coming down, but this is one that I'm pretty sure is going to move from a Zacks rank #3 to a Zacks rank #5. Pier 1 Imports. PIR is the ticker. Right now, as I noted, it is that rank 3. Has an F for growth. Who knew? I guess bad things are happening at Pier 1, Ryan.
Yeah, this makes 8 out of the last 10 quarters that they've seen slumping sales figures. So you talk about, you know, like declining revenue charts, not the stock for you.
Not my thing, right? Yeah, so if we take a look here, this is the event here. The estimates were looking for 12 cents. They reported 9. So that's a 3-cent miss, 25% negative earnings surprise. Guidance for next quarter was also pretty bad. So if we look at it here, you know, we've got 40 cents. I guess this is the current quarter. Maybe this is for the next quarter. I'm not exactly sure because the event was just today. But they lowered their guidance range to 16 cents to 24 cents for next quarter when the consensus was looking for 38 cents. So we might be a little rich on our 40-cent number. So obviously that number is going to move lower. When we see estimates moving lower, what usually happens, Ryan?
Well, we see their Zacks rank take a hit.
That's right. Stock generally tends to follow earnings estimates if you're a fundamental investor, if you follow the fundamentals. And if we look here at the chart for Pier 1, boy, oh boy, this is not what you want to see. And then a real bad thing here where you have this miss, guide lower, stock getting crushed for 30%. Also coming up, stores are closing. So when you have a retailer losing stores, how are you going to have more sales? You have fewer stores. How can you have more sales?
Well, you'd think a shift to e-commerce, as a lot of the traditional brick and mortar retailers have been forced to do over the past few years, and we've seen some of those traditional retail stores do that well and find success there. In this most recent quarter, Pier 1 reported a 27% increase in online sales. Now accounts for 26% of total sales. That's going to be the highlight management points you to. But if you look back to Q2, that was a 35% increase in online sales, and that was 27% of total sales. So that's going to be the green spot management points you to, and it, in the grand scheme of things, wasn't even that impressive. Also, a problem that I have with this company, no mobile application. Still, in 2017, about to be 2018, no mobile application. Your online sales accounts for 26% of total revenue, and you don't have a mobile application. Sure, expensive furniture isn't necessarily something I'm thinking about buying on my phone, but we've seen across retail, no matter what the product, people are interested in shopping on their phone, and you just are still considering developing a mobile application. I don't get it.
Right.
I don't get it, especially when you have competition from Amazon, not just other furniture retailers selling their furniture on Amazon and just going right over the head of a place like Pier 1, but Amazon itself launching its own furniture brands. One like Stone and Beam, an Amazon furniture brand that's that country modern, expensive furniture, living room furniture, is really Pier 1's bread and butter. Amazon just saying, you know what, we can do it better than you at a lower cost. We'll take all your customers.
Well, I'll tell you, Ryan, you have really said it all here.
And Amazon has a mobile application.
Amazon, yes, definitely has the mobile application. Who knew that millennials were that interested in furniture and shopping for it on the phone? I mean, at least to see it, right? I guess that's your point. They should at least be able to compare the Pier 1 offerings on your phone.
Exactly.
All right, well, that's going to do it for this week's Bolan's Blowouts. Be sure to join us again next time.